Look at the scale and density of the modern UAE market. The country's relentless push toward a knowledge-based economy demands incredible speed and digital agility from any company trying to compete here. But inside the offices powering this growth, the reality is often much slower. Teams frequently find themselves bogged down by manual data entry, spending hours cross-referencing dozens of overlapping spreadsheets just to complete routine tasks. As you can see in this 3D system architecture model, this happens because of a structural flaw called data silos. A data silo is an isolated pocket of information that cannot easily interact with other parts of a company. Departments like finance, HR, and operations end up existing as completely separate islands, communicating through broken or severely bottlenecked pathways. In a highly regulated business environment, these disconnected systems are major vulnerabilities. Missing data and communication breakdowns create expensive friction that actively drains resources and erodes profit margins. Take the finance department, for example. At the end of every quarter, accountants manually pull sales figures from one system and inventory from another to calculate value-added tax, or VAT. A single copy-paste error here leads to an incorrect return and a potential audit from the Federal Tax Authority. Meanwhile, HR managers spend days manually tracking salaries, overtime, and deductions across multiple files. This heavy administrative load frequently delays mandatory updates to the wages protection system, an electronic salary transfer system required by the government to ensure timely pay. On the operations side, property managers in Abu Dhabi often rely on disjointed software to track their tenant portfolios. Without a single reliable view of their data, they routinely miss critical commercial lease renewal dates. These isolated daily failures compound quickly. They trigger severe government penalties, unrecoverable lost revenue, and create an administrative ceiling that makes safely scaling the business nearly impossible. To fix this, a company needs an Enterprise Resource Planning System, or ERP. An ERP acts as the digital central nervous system of a business, connecting all critical departments to establish a single source of truth. Instead of isolated nodes, the ERP pulls departmental data into one synchronized central core. Watch this core expand with a protective outer layer. UAE businesses require systems engineered with built-in regulatory filters for local tax, payroll, and labor laws. Achieving perfect operational sync in the UAE requires a structural framework that treats local regulatory compliance as a core feature rather than an afterthought. When a system is localized from the ground up, it neutralizes finance risks by automatically calculating tax-compliant VAT directly from frontline sales data, and it generates the mandated electronic invoices instantly. For HR, the software instantly translates all payroll calculations into a salary information file, or SIF. This is the exact digital format required by local banks and the Ministry of Human Resources to process payments legally and on time. This regional design also improves daily operations. Diverse teams can switch fluidly between Arabic and English interfaces, while the software automatically applies correct calculations for UAE labor laws, such as end-of-service gratuity and annual leave. By hardwiring these local rules into the system's architecture, data flows perfectly from a frontline invoice straight to the general ledger. Human interference is removed, entirely eliminating regulatory friction. With data flowing automatically, managers suddenly get hundreds of hours back. They transition away from manual data entry and start using that reclaimed time to analyze trends and drive strategic growth. Getting to this point requires a major architectural decision regarding how the software is deployed. Businesses choose between two deployment paths: on-premise, an upfront CapEx investment where you own the servers, or cloud software as a service, a predictable monthly OpEx. Notice how the cloud model easily scales outward, expanding to accommodate remote GCC workforces with high agility without needing new hardware. This deployment choice establishes a bespoke, scalable business infrastructure that aligns precisely with long-term financial and operational goals. Replacing your company's core engine is a delicate process. It demands an experienced, locally grounded software partner with regional authority, like Hinawi ERP, developed right here in Abu Dhabi since 1998. The roadmap to upgrading begins internally. You must conduct a strict needs audit to map out the bottlenecks frustrating your finance, HR, and operations teams. Armed with those specifics, demand a personalized software demonstration using your real-world scenarios. You also need a precise, step-by-step data migration blueprint to ensure you move your legacy data with zero operational downtime. In an economy racing toward total digitalization, relying on disconnected data is a major liability. Upgrading to a unified, localized ERP is the most sustainable way to legally protect your assets and aggressively scale your business.